So have you ever wondered how much money you need to make to buy a house like this or this? Wonder no longer, because today we'll cover exactly how much house you can afford in Germany. As a rule of thumb, your maximum monthly payment on a loan should not exceed 35% of your monthly net household income. When it comes to housing expenses, it's important to understand that there's a huge difference between buying and renting, and as you're about to see, the costs are going to be substantially different on which route you decide to go. For example, your rent is the most you'll ever pay each month and your mortgage is the least you'll ever pay. As a renter, you pay your kalt meter or the cold rent at a fixed rate, and the Nebenkosten or the additional costs are somewhat variable, but you generally pay them based on your usage. There aren't going to be any surprise bills or urgent repairs that can drain your bank account. Whereas when you buy a house, well, you have your mortgage. If anything breaks down, you have to get that fixed. Then there are insurances, gardening fees, and so much more, which I will be discussing in detail. Buying or building a house in Germany is a decision that many of us would probably make only once in our lives, and that presents us with major financial challenges. That's why the first step on the way to your dream property is the question of financial leeway. In order to determine this, you have to answer 3 questions. What's your monthly burden that you can cope with? How high are your financial needs? And number 3, what loan interest rate results from your financial flexibility? As I mentioned in the beginning, most people use a rule of thumb having a maximum loan of less than 35% of your monthly net income. To calculate this, just take your monthly income, multiply that by 0.35, and that's how much your payment should be, which is enough to buy a home in the 200,000 range with a down payment of 20% at a 3.5% interest rate. Of course, if you're disappointed that a 65,000 euro salary is only enough to afford a 200,000 euro home, you're not alone. And if you want something to blame, it's the extremely low interest rates in the past 10 years, the German bureaucracy, and the horrendously low amount of real estate being built in Germany. Just consider that when the mortgage rates were sub 1%, the typical 65,000 euro income was enough to buy a home in the 250,000 euros range, but now, with the cost having increased, that financial number is significantly lower. That's why, under the 35% rule, you would need to be making 120,000 euros per year to buy a 500,000 euro house in Germany, or 260,000 euros per year to purchase this 1 million euro house in Munich with monthly loan installments of 2,000 and 4,000 euros respectively. With this rule, the monthly loan installment should always be lower than your financial resilience. What do I mean by monthly financial resilience? A monthly bill of expenses or household account is a good starting point to determine the possible monthly loan installment. It is best to use tables to record all monthly household costs, special expenses, and living expenses. I have a free template on my website, link in the description below. So you don't have to forget any expenses and can compare them with your monthly income and other permanent income. The difference now shows you your individual financial resilience. Potential buyers who fully and continuously record their expenses do not have to expect any unpleasant surprises with their finances. A sample calculation for a family of 3 might look like this. House owners do save on the rent, but still have to bear heating, electricity, water, sewerage, and waste costs. That is why some people use the 2% rule, which says that you'll spend 2 euros for every single square meter of livable space every year for homes or apartments in Germany. You should also put money aside for maintenance, repairs, and renovations on the house that will sooner or later require a lot of money. If the planned financial reserve is not used up every month, this money can be used as a reserve for future expenses. The household account is the basis to determine how much house you can afford in Germany, because without looking at the household finances, you will not have an overview of your liquidity. In particular, you need to know what expenses you will incur. It will definitely benefit you to have an honest and realistic check. The more precisely you estimate your income and expenses, the less likely it is that the financing calculations will fail. To be on the safe side, please also include an emergency fund so that unpleasant costs do not lead to future problems with your loan payment. Have you considered what would happen if you or your partner lost your job? How many months would you be able to survive without a job? I want you to include this variable in your calculations, because just a couple of days ago, someone I know got terminated from their job and they are now having huge financial problems because they are not able to pay the installments on their loans. So you have deducted the regular and sporadic expenses from the long-term secured income and you have figured out your financial resilience. Next, we will discuss the role of equity in budget determination. Unless you've been saving for many years or hit the jackpot, it's unlikely that you would be buying a house in Germany with your own resources. That's why you're going to need real estate financing. When you take out a loan, you pay monthly installments and those include an interest and repayment component. It is important to know that the more equity you bring in, the lower the monthly financial burden, as equity lowers the interest costs of your home loan. What exactly can be included in equity? As someone who's interested in buying a house in Germany, real estate buyers can include cash, funds in the bank account, securities such as stocks and ETFs, life insurance payouts, and many others, but all of these depend on whether you get a loan on a property you want to buy or build. Banks assume around 20 to 30% equity is good for real estate financing. This is essential to how much house you can afford in Germany, because the less real estate loan you need, the lower your repayment amount to the bank. When buying a house without equity, borrowers have to have a credit rating that is beyond any doubt and must be able to pay high monthly loan installments. This type of real estate financing is therefore only an option in exceptional cases. One thing to note here is that in one of my videos I made a while ago, I mentioned that it's not possible to get a loan if you are on a blue card. That was based on my personal experience, but since then I have seen many cases of people getting a home loan in Germany even on blue card. Please hit the like button if you're getting value from this video and consider subscribing. Coming back to equity, the percentage of funds you bring doesn't just reduce your credit ratio. Borrowers with higher equity also receive better conditions than other borrowers. Anyone who has already saved up their own funds is considered trustworthy and disciplined by the banks. Make sure that you keep your emergency fund separate from your equity. So you have calculated your financial resilience, you know how much equity you can bring in. What else is needed to find out how much house you can afford in Germany? Well, one of the biggest expenses you need to consider is the Nebenkosten, or the additional cost of buying a house in Germany. Banks usually do not finance any additional purchase costs. You as the borrower must cover at least these costs from your own funds. Depending on the federal state in which the property is located, this is between 10 and 15% of the purchase price. These costs should not be underestimated, as they play a huge role in figuring out how much house you can afford in Germany. These include property transfer tax, which is between 3.5 to 6.5%, notar costs, which is about 1% for entry into the land register, and broker costs of between 3 to 6%. You should know that these additional costs for buying a property in Germany are due for payment at the notary immediately after the purchase contract has been concluded. The notary fees cannot be negotiated arbitrarily and depends on the property purchase price and have been uniformly regulated by the law. That's why when planning your budget, you should also take into account the additional costs. If these costs are not included, the budget will lack money for the loan repayments or maintenance costs of the property in the short or long term. There are other costs that you should also consider, like expenses for moving and new furniture if necessary, modernization or repair costs. Trust me, you will need to do some repairs when you buy your house in Germany. Those won't be necessary, but you'll do them nevertheless. Don't forget the ongoing additional costs weighing on your monthly budget. They include the annual property tax as well as insurance premiums for home insurance and natural hazard insurance. Just keep in mind, what I've mentioned in this video are general guidelines, and there's nothing that says you can't split this cost with your partner, live with your roommates, or spend a different amount. That's why if you want to invest in real estate, don't buy a home in Germany without watching this video.